Why did the stock market crash? Here's a better question. Why do you care? If you have already decided to start investing your money, maybe it was a few years ago, maybe it was 10 years ago, maybe even 20 years ago, no matter how long ago you started investing, this is all part of the plan. This is all part of the bigger picture. The markets are volatile, always. Nothing can go up forever. Things come down. We have been on a massive tear. The entire stock markets have been on a massive tear, or the US stock market, over the past 5 years. This is a healthy correction and an incredible buying opportunity. In fact, I pray for more crashes as I am in an accumulation phase, aka young. We have time to invest. The more the share market goes down, the more you should be purchasing, essentially. If you can look at a chart of a stock market over the past 100 years, and you can see all the little blips, those are things like the Great Recessions, the Great Depressions, massive global pandemics, stock market crashes. And they are tiny little blips in time in the grand scheme of things. So if you're investing, that means you're not trading, you're investing. Therefore, you put your money into something for a long enough period of time to reap the rewards. Hence, long enough period of time. You're not trading. Therefore, you should not care what the stock market is doing this month or that month. It's irrelevant. If you're accumulating and you're in your accumulating years between the age of 20 to 50, or even sooner, if you can generate enough income to put into the stock market to build your nest egg, I digress. You should not be concerned with the daily movements, the monthly movements, heck, even the yearly movements. The minimum time frame that you should be investing for long-term wealth building is 10 years. Heck, I'd probably say 15 years. Minimum time frame. That is the minimum amount of time that you need to be investing for in order for compound interest to really start working in your favor. So the best advice that anyone can give you is probably to just completely ignore what the market is doing. Don't watch the news, don't listen to the headlines, do not pay attention to it. Majority of it is fear-mongering and just a way for the rich to take from you if you sell. As Warren Buffett quotes, the stock market is a device for transferring wealth from the impatient to the patient. All you need to just know that in 10 years' time from now, the stock market is most likely going to be a lot higher than it is today. And that is evident over the past 100 years of stock market price action, which you can simply Google and see the charts right there in plain sight. So today's prices are going to look cheap in the future. That is 99% guaranteed. 1% is if an asteroid collides with the Earth and we all die. That's the 1% chance. As long as the world keeps spinning, businesses keep expanding and innovating, the governments still support the economies keep growing, inflation keeps going higher, money in general expands, the world adapts and innovates, asset prices will continue to rise. Asset prices, aka shares, real estate, bonds. That's all for today's video. Business as usual, guys. Just keep on investing. Dollar cost averaging every month.